All right, so Aster Healthcare, huh? Their 2023-24 report, it's pretty amazing. We're gonna take a deep dive into it and yeah, see what they're doing in India. So now they're growing.
Well, they just, they went all in on India in April 2024,
Yeah.
sold their GCC business. So they're completely focused on the Indian market now.
Wow, okay.
And to prove it, they gave shareholders a special dividend,
Okay.
118 rupees per share,
Wow.
which comes out to 5,894 crore rupees total.
Yeah, that's really putting your money where your mouth is.
Exactly. And their revenue's going up too.
Okay, so how much did they bring in?
3,519 crore rupees in fiscal year 2024.
Okay.
A 23% increase year on year.
Wow, that's incredible growth.
Yeah, and their operating EBITDA, that went up even more.
So they're really making bank over there.
30% year on year.
That's incredible.
Yeah, and their core hospitals, the EBITDA margin is fantastic, 19.5%.
Okay.
And if you don't count the hospitals operating under the O&M, the operations and management model, that margin jumps up even higher.
Okay, so how high are we talking?
To 20.3%.
So they're becoming more profitable, not just growing?
That's right. And one reason for that is they're investing in capacity expansion.
Okay, so building more hospitals, adding more beds, that kind of thing.
Exactly. Just in fiscal year 2024, they added 550 new beds. So now they're up to 4,867 across India.
So bigger IS, better in this case.
It seems to be working.
Okay, and their report has some really ambitious plans for the future. Like, what are they looking at?
Well, in fiscal year 2024, they put aside 392 crore rupees for capital expenditure. 60% of that's going to capacity expansion.
Got it.
And their goal is to add almost 1,700 beds over the next 3 years.
Wow.
60% of those will be through what they call brownfield projects. So that's expanding existing facilities instead of building new ones from scratch.
Okay, so more bang for your buck. So they're almost doubling their current capacity.
Make a bold move.
Where are they planning all this expansion?
So they have a few projects lined up. In Thiruvananthapuram, they're building Aster Capital, a 454-bed hospital.
That's massive.
Then there's a 264-bed facility at Aster MIMS Kasaragod.
Okay.
And in Bangalore, they're adding 350 beds to their Aster CMI hospital.
They're really going all in, huh?
They are. But, there's a good reason for all this ambition.
What is it?
The Indian healthcare market is booming.
Okay.
Huge demand, not enough supply. Over 1.4 billion people, but a major shortage of hospital beds.
Wow.
India needs 10 times the number of beds they currently have just to meet the demand.
That's incredible. What's driving this surge in demand?
A lot of things, actually. Incomes are rising.
Okay.
People can afford more health care.
Right.
The population's aging, which means, more need for healthcare services as people get older.
Makes sense.
Plus, there's this growing awareness about health. People are taking preventive care more seriously.
Yeah.
It all adds up.
So it's not just the growing population, it's a whole shift in lifestyle and how people think about their health. But is it only people in India who are driving this boom?
Not at all. Medical tourism is huge in India.
Wow.
This year, it's valued at $7.69 billion US dollars.
Okay.
And by 2029, it's projected to reach $14.31 billion. People from all over the world are coming to India for the hospitals and doctors.
So Aster's in a prime position to benefit from both domestic and international demand.
Absolutely. And then you have the rise of health insurance.
Yeah. How is that impacting things?
Big time. In fiscal year 2024, health insurance premiums in India reached 109,679 crore rupees. That's about 13.07 billion US dollars. And the government's pushing for wider coverage, making healthcare more accessible.
So it's like this perfect storm of factors creating a huge opportunity.
Mm-hmm.
But Aster's not just passively watching this happen. They're actively shaping their own success.
Right. They're not just building more hospitals. They're really focused on efficiency and top-notch patient care. One way they're doing this is by targeting niche specialties and incorporating cutting-edge tech.
So specializing and using technology for efficiency makes sense. Anything else they're doing?
They're also working with an asset-light, low-capital expenditure business model. So instead of owning every single thing, they're forming strategic partnerships and collaborations to expand their reach.
Smart move. And they're also going for inorganic growth.
Right.
Expanding into new areas, solidifying their market position.
Exactly. Their goal is to be in the top 3 healthcare players in India. It's ambitious. And they're not just focused on physical expansion, they're also investing heavily in virtual care.
Like their upcoming digital app, right?
Yeah,
It's all about making healthcare more accessible and efficient through technology, staying ahead of the curve.
exactly. But beyond the bricks and mortar and the technology, they're also really dedicated to building a strong, diverse workforce.
Their annual report really highlighted that. In fiscal year 2024, their total workforce was 11,870. That includes 9,271 permanent staff and 2,599 temporary staff.
And what's really great is over 40% of their employees are women. Plus, they have comprehensive benefits and top-notch training programs.
Yeah, I was impressed by their continuing medical education and continuing nursing education programs. Shows they're really dedicated to keeping their healthcare professionals up to date.
Absolutely. It's crucial in such a rapidly changing field. And they're not just focused on their own employees. Their commitment to social responsibility is truly impressive. Through various programs, they've touched the lives of over 5 million people globally.
That's incredible. Which initiatives stand out to you?
Their Aster Homes project, for one, they rebuilt 255 homes for flood victims in Kerala.
That's amazing.
And their mobile medical services have reached over 1.4 million people, providing essential health care to remote and underserved areas. And then there are their medical and wellness camps, which have benefited over 992,017 people with free checkups, screenings, and awareness sessions.
It's inspiring to see a company not just focused on profits, but also on making a tangible difference in people's lives. But let's be real, every success story comes with its challenges, right?
Of course, the healthcare landscape in India is incredibly dynamic. One of the biggest challenges is the rapid evolution of digital healthcare.
And it seems like they're acknowledging this in their report and are taking steps to adapt.
Absolutely. They're investing heavily in technology and cybersecurity to protect their systems and patient data. But these investments could lead to increased operational costs down the line.
It's a balancing act, isn't it? Staying ahead of the tech curve while managing your finances wisely.
It is. And another challenge they point out is the potential impact of a shifting business environment. Telehealth, remote care delivery, digital patient monitoring, it's all changing how healthcare is delivered.
And it seems like they're embracing this digital wave, not shying away from it.
Right. They see it as an opportunity to provide better, more accessible care through technology. They also know that competition in the health technology sector is growing.
So they're investing in tech, strengthening cybersecurity, and building a multi-layered governance structure to ensure responsible implementation of these advancements.
Precisely. And of course, these things come with financial implications. The report does mention that these initiatives could increase their operational costs.
It's a calculated risk, but one they need to take to remain competitive and provide cutting-edge healthcare. But the report also mentions another risk, their dependence on certain specialties.
Right, we talked about how they're focusing on niche specialties to improve their ARPOB and margins. But if the demand for those specialties drops or competition increases, that could become a problem.
So what are they doing about it?
They're working to maintain a balanced portfolio across various specialties. No single area makes up more than 15% of their total revenue. That way, they're less vulnerable to fluctuations in any particular specialty.
That's smart, spreading the risk. Their report also talks about the importance of their commercial team's performance.
Absolutely. The success of their sales and marketing directly affects their ability to attract and retain patients.
Makes sense. Underperformance in that area could really hurt their revenue and profitability.
And lastly, they bring up supply chain management as a potential area of concern.
Yeah, any healthcare provider relies heavily on a smooth supply chain, right? For medicines, equipment, all the essentials.
Exactly. Any disruption in that chain, whether it's global events, logistical issues, or supplier problems, could have a huge impact.
So what are they doing to address this?
They've put in place strong supply chain management systems, focusing on diversifying their vendors, building strategic partnerships, and optimizing their inventory.
So it's all about planning ahead and minimizing potential disruptions. It's great to see they're not just focused on growth, but also on managing the risks involved. Their annual report really delves into their risk management structure, showing their commitment to proactively identifying and managing potential problems.
Absolutely. They have a really comprehensive risk management process. It involves multiple stages: risk identification, measurement, management monitoring, and communication.
And it's not just a set-it-forget-it system, right?
No, they have regular discussions and reviews to adapt to evolving risks. Senior executives, including the CXOs, meet monthly to make sure they're on top of any emerging risks. Then, the Risk Management Committee, RMC, conducts a thorough annual review of the company's overall risk management strategies and how effective they are.
So they're not just reacting to problems, they're actively trying to anticipate and prevent them. That's crucial in such a complex field like healthcare. Now let's dig a bit deeper into their financials. Their report gives us some insight into their different revenue streams.
They've got a really diversified revenue model, which is great for stability. It's spread across various specialties, and no single segment contributes more than 15% to their total revenue.
Smart move, spreading the risk. So which specialties are their top performers?
In FY24, 58% of their revenue came from specialized areas like cardiac sciences, neurology, oncology, gastro and liver care, nephrology, and orthopedics. These are the areas that tend to have higher ARPOB and contribute significantly to their profitability.
Makes sense. Focusing on specialized care allows them to meet the demand for complex procedures and get higher prices. But they also break down their revenue geographically, right?
Yes, they operate in 5 states in India: Kerala, Karnataka, Maharashtra, Telangana, and Andhra Pradesh. Their strongest performance in FY24 came from the Karnataka and Maharashtra cluster, which includes hospitals like Aster CMI, Aster RV, Aster Mother, Aster Adhar, Aster Prime, and Aster Whitefield.
Okay. And what about their flagship hospital, Aster MedCity in Kerala? How did that perform?
Aster MedCity is still a key contributor to their overall revenue. It focuses on tertiary and quaternary care services and is known for its centers of excellence in cardiac sciences, neurosciences, oncology, and orthopedics.
So they have a strategic presence across key regions, catering to diverse healthcare needs. But it's not just hospital services, right? Their report mentions other businesses like labs and pharmacies.
That's right. They've been expanding their ancillary businesses to create a more comprehensive healthcare ecosystem. Their labs and wholesale pharmacy business in particular have been growing really well.
How well are we talking?
They've achieved a compound annual growth rate of 51% since FY22.
Wow, that's impressive. How much did these businesses contribute to their overall revenue in FY24?
They brought in 286 crore rupees in FY24. That's a big jump from 126 crore rupees in FY22. So they now represent 8% of their total revenue, up from 5% in FY22.
It seems like these businesses are becoming increasingly important to their overall strategy. Are they profitable?
Their lab business actually became EBITDA positive in the last quarter of FY24. So it looks like these ancillary businesses have a lot of potential, not just for revenue growth, but also for overall profitability.
So they're diversifying their revenue streams and using their brand and expertise to create a more comprehensive and profitable healthcare ecosystem. But even with all this growth and expansion, they're still committed to responsible and sustainable practices.
Absolutely. Their annual report dedicates a whole section to their environmental, social, and governance, ESG, initiatives. They're really trying to minimize their environmental impact, promote diversity and inclusion, and ensure ethical business practices.
It's great to see them aligning their growth with sustainable practices. They even provide a breakdown of their water and energy consumption, showing their commitment to resource efficiency.
They've got a whole range of initiatives to reduce their environmental footprint, things like water harvesting, energy-efficient lighting, and waste management programs. They're also working to reduce their greenhouse gas emissions and promote responsible waste disposal.
So they're not just about treating patients, they're also taking care of the planet. And their commitment to social responsibility is equally impressive. They talk about creating a diverse and inclusive workforce, providing equitable healthcare access, and supporting community development.
Their employee benefits program is particularly noteworthy. They offer comprehensive health insurance, family leave, and professional development opportunities. They also prioritize employee well-being, offering mental health support and promoting a healthy work-life balance.
It's clear they value their employees and recognize their contribution to the company's success. And it's not just internal. They're also actively engaged in community outreach.
Their CSR programs have touched the lives of millions. They run mobile medical camps, health awareness initiatives, and disaster relief efforts. They're particularly focused on providing healthcare access to underserved communities and empowering individuals through education and skill development.
It's really inspiring to see. Their annual report gives a really thorough overview of their operations. They highlight their achievements, future plans, and commitment to responsible growth. Before we move on, I want to take a closer look at their governance structure and risk management approach. Yeah, that's crucial for any successful company. Their governance framework is built on transparency, accountability, and ethical conduct. They have a board of directors made up of experienced professionals with diverse expertise. They provide strategic guidance and ensure effective oversight.
And they have committees for specific areas, like the Audit Committee, the Nomination and Remuneration Committee, and the Risk Management Committee. These committees are essential for making sure everything is running smoothly, managing finances, and mitigating potential risks.
Their risk management approach is really robust. They have a structured process for identifying, assessing, and managing risks. This involves regular reviews, detailed risk registers, and specific mitigation strategies. They also prioritize proactive monitoring and communication to make sure they can respond quickly and effectively to any emerging threats. It sounds like they're not just waiting for problems to happen, they're trying to anticipate and prevent them. That's so important in a dynamic industry like healthcare.
Absolutely. And they're really focused on compliance, making sure they're following all the relevant laws, regulations, and ethical standards. They have a dedicated compliance team that oversees everything and conducts regular audits.
It sounds like they're doing everything right when it comes to responsible governance and risk management. They're being transparent, accountable, and committed to ethical conduct. But every investment has its downsides and risks, right?
Of course, no investment is completely risk-free. Aster Healthcare is operating in a very competitive and rapidly evolving industry. The Indian healthcare sector is attracting a lot of investment, which means more competition, both from domestic and international players.
So they got to constantly innovate and adapt to stay ahead of the game.
Exactly. And they also have the challenge of managing costs in a sector where the demand for advanced technology and specialized care is constantly rising.
And as we've discussed, their investments in technology and cybersecurity, while crucial for their long-term success, could put pressure on their operating costs in the short term.
That's right. Another potential risk comes from the regulatory environment. Healthcare is a heavily regulated industry, and any changes in government policies could impact their operations and profitability.
So they need to be agile and adaptable to handle these changes effectively. And their reliance on certain specialties, as we talked about before, also carries some degree of risk.
If demand for those specialties drops or if competition increases, that could affect their revenue and profitability. They're mitigating this through diversification, but it's still something to keep in mind.
And then there are always unpredictable external factors, like pandemics, natural disasters, or economic downturns.
Right. Those are things they can't control. But they've shown resilience and adaptability in the past, and their risk management framework is designed to help them navigate those kinds of challenges.
Overall, their annual report paints a picture of a company that's not only financially successful, but also committed to responsible and sustainable growth. They're using technology, expanding strategically, and focusing on specialized care to meet India's growing healthcare needs.
And they're investing in their people, promoting diversity, and giving back to the community. They're aware of the challenges and are actively working to address them.
It's a company with a clear vision and a strong track record. But what does this all mean for you, the listener? Why should you care about Aster Healthcare?
Well, Aster Healthcare's journey gives us valuable insights into how the Indian healthcare market works. Their growth story highlights the massive potential of this sector, fueled by a growing population, rising incomes, and increasing awareness about health.
They're a key player in a sector that's undergoing a huge transformation. Their strategic decisions, their financial performance, their commitment to responsible practices, it's all valuable information for anyone who wants to understand the Indian healthcare landscape.
Their focus on specialized care shows the growing demand for complex medical procedures and the potential for profit in this niche. Their embrace of technology shows how powerful digital healthcare can be in making healthcare more accessible, efficient, and patient-centered.
And their commitment to ESG principles shows how important it is for companies to align their growth with sustainability and social responsibility. But their story also shows the challenges and risks in this dynamic sector. The competition, the changing regulations, the need for constant innovation. These are things that anyone operating in this market has to deal with.
Aster Healthcare's experience is a valuable case study. It's a story of opportunity, growth, and challenges, and it offers some great insights for investors, healthcare professionals, and anyone interested in the future of healthcare in India.
Before we go deeper into their financial statements, I want to pause and ask you, what stands out to you about Aster Healthcare? What's piqued your interest?
Their decision to divest from their GCC business and focus entirely on India is a perfect example of their strategic thinking. They really believe in the long-term potential of the Indian market.
Absolutely. Their bold move to distribute such a huge special dividend really shows their confidence in their India-focused strategy.
And it's not just blind faith. Their financial performance backs it up. Their revenue growth, their expanding margins, their ambitious expansion plans, it all indicates a company that's in a great position to take advantage of the opportunities in the Indian healthcare sector.
Their commitment to a diversified revenue model, geographically and in terms of specialties, is also a real strength. It's a smart way to mitigate risks and ensure sustainable growth.
And the effort they've put into building a robust risk management framework shows that they're proactive in dealing with the complexities of this industry. They're not just hoping for the best, they're actively planning and taking steps to minimize potential disruptions.
Their investments in technology and cybersecurity are noteworthy too. They're embracing the digital revolution in healthcare and positioning themselves as leaders in this space.
And they're not just chasing profits. Their commitment to ESG principles, to diversity and inclusion, to social responsibility initiatives, it all highlights their belief that growth should be responsible and sustainable.
It's a well-rounded approach that considers their impact on employees, the community, and the environment, not just financial success.
There's a lot to admire about Aster Healthcare's approach, but it's important to remember that they're not immune to challenges. The competitive landscape, the changing regulations, the need for constant innovation, these are all factors that could affect their future success.
Absolutely. Their story is a good reminder that even the most successful companies have to be adaptable, agile, and constantly evolving to stay ahead in such a dynamic market. Now let's get into those financial statements. They often reveal a deeper story than the headlines.
Yeah, let's crunch some numbers. Their consolidated financial statements, which include the performance of their subsidiaries, associates, and joint ventures, give us a good overview of their financial health.
Their consolidated revenue from operations was 5,244 crore rupees for the year ended March 34, 2024. That's a 21% increase from the previous year. Pretty strong top-line growth.
And their profitability kept up. Their consolidated EBITDA for FY24 was 620 crore rupees. That's a healthy 11.8% margin. It shows they're good at turning revenue growth into profit.
So they're growing profitably, but it's important to look beyond the top-line figures and analyze their costs to understand how they're achieving that profitability.
Right. Their employee benefits expenses are a big part of their operating costs. In FY24, those reached 1,004 crore rupees, reflecting their commitment to fairly compensating their workforce.
Their finance costs are also worth noting, especially after their recent strategic decisions. Those were 123 crore rupees in FY24, including interest expenses on their borrowings and lease liabilities.
And as we mentioned, their technology and cybersecurity investments will likely affect their operating costs in the future. But it's important to see these expenses as part of their long-term growth strategy.
Absolutely. Investing in technology in their workforce is essential if they want to stay competitive and offer high-quality healthcare. Let's look at some key financial ratios to get a better picture of their performance.
One important ratio is their debt-to-equity ratio. This measures how much they're using borrowed money to finance their assets. As of March 31st, 2024, that ratio was 0.41, which indicates a good balance between debt and equity financing.
So they're not overly reliant on debt, which is a good thing. What about their return on equity, or ROE?
In FY24, their ROE was a very impressive 23.2%. This means they're very efficient at generating profits from shareholder investments. It reflects their good strategic decisions, operational excellence, and ability to create value for shareholders.
What about their current ratio? That tells us about their short-term liquidity, their ability to meet short-term obligations.
As of March 31st, 2024, their current ratio was 1.09, which means they have enough short-term assets to cover their short-term liabilities. They're in a good position to manage their working capital and meet their financial obligations.
And their inventory turnover ratio, that's another measure of operational efficiency.
In FY24, their inventory turnover ratio was 7.44. That indicates they're managing their inventory well and minimizing the risk of obsolescence or spoilage.
So all these financial ratios, along with their overall financial performance, paint a positive picture. They're financially sound, well-managed, and strategically positioned for growth.
Yes, but it's important to remember that past performance doesn't guarantee future results. Healthcare is constantly evolving, and Aster Healthcare needs to stay agile, innovative, and adaptable if they want to maintain their success.
Now let's dig into some of the details in their financial statements.
Their notes to the consolidated financial statements give us a lot of information about their accounting policies, key assumptions, and risk factors. For example, they outline how they recognize revenue from their various services.
Right. How do they handle that?
Well, they emphasize that revenue from hospital services is recognized when those services are actually provided, unless there's some major uncertainty about the future.
So they're taking a careful approach, only recognizing revenue when it's pretty much certain.
Exactly. They also provide information about how they assess impairment for goodwill and other intangible assets, including the key assumptions and methods they use in that process.
Those impairment assessments are crucial to make sure that the value of their assets on their books actually reflects their real economic value.
Right. They also disclose details about their foreign currency transactions and translations, which is especially relevant because they have international operations.
Okay. How do they handle that?
They translate foreign currency transactions into their functional currency using the exchange rates on the dates of those transactions.
So they're managing currency risk and making sure their financial reporting is accurate. What about their lease accounting policies?
They adhere to the principles of INAS 116, which is a standard for leases. This requires them to recognize right-of-use assets and lease liabilities for most of their leases.
That new accounting standard gives a much clearer and more transparent view of their lease commitments.
Absolutely. They also provide information about their employee benefit plans, including their gratuity and provident fund obligations. They explain the key assumptions used in their actuarial valuations.
These disclosures are essential for understanding their long-term liabilities and commitment to employee welfare.
Right. And to ensure transparency and accountability, their notes to the financial statements also include details about their related party transactions, which are any dealings with entities that are connected to their management or board of directors.
Those disclosures are so important for maintaining investor confidence and ensuring ethical business practices.
Absolutely. And they're also upfront about the inherent uncertainties in their business. Their financial statements acknowledge the potential impact of external factors like economic downturns, regulatory changes, and unexpected events like pandemics.
It's good that they're transparent about those risks and how they plan to mitigate them.
Right. These detailed disclosures in their financial statements really provide valuable insights into their operations, their accounting policies, and the key assumptions behind their financial results.
They're really committed to transparency and accountability, which is so important for building trust with investors and other stakeholders. We've covered a lot today, from their strategic decisions to their financial performance, their risk management practices, and their commitment to responsible growth.
It's been a deep dive for sure.
Before we wrap up this part, let's take a minute to go over what we've learned and highlight the key takeaways for our listeners.
Sounds good. Let's summarize.
First and foremost, Aster Healthcare is a company that's moving forward. They've made some bold strategic decisions, like divesting from their GCC business and focusing solely on India. This shows their confidence in the growth potential of the Indian healthcare market.
And their financial performance supports that confidence. They've had impressive revenue growth, expanding margins, and strong returns on equity, which demonstrates their operational efficiency and their ability to create value for shareholders.
Their strategic focus on niche specialties and their adoption of technology are key drivers of their success. They're meeting the growing demand for complex medical procedures and using digital healthcare to improve access, efficiency, and patient care.
Their diversified revenue model, both geographically and in terms of specialties, helps mitigate risks and ensures sustainable growth. They're also expanding strategically, adding new beds and facilities to keep up with the increasing demand for healthcare services.
They're also committed to building a strong and diverse workforce. They offer comprehensive employee benefits and promote a culture of inclusivity. They're investing in the well-being and professional development of their employees, recognizing that their staff is their most valuable asset.
Their dedication to social responsibility is also impressive. Their CSR initiatives, focused on providing healthcare access to underserved communities, empowering individuals through education, and supporting disaster relief, show their commitment to making a positive impact.
They're actively working to minimize their environmental footprint, too. They're implementing programs for resource efficiency and promoting responsible waste disposal. They're aligning their growth with sustainability and social responsibility, showing that they believe in balancing profit with purpose.
Their governance structure is solid, ensuring transparency, accountability, and ethical conduct. And their risk management framework is comprehensive, involving proactively identifying, assessing, and mitigating potential threats.
They're aware of the challenges they face and are actively taking steps to address them by investing in technology, building a strong workforce, and diversifying their revenue streams.
Aster Healthcare is a company that's not just doing well financially, but also operating responsibly to make a positive impact. They're a force to be reckoned with in the Indian healthcare sector.
But their story isn't just about their own success. It gives us valuable insights into how this rapidly growing and evolving market works. Their experiences, their strategies, and the challenges they face offer valuable lessons for anyone who's interested in the future of healthcare in India.
Exactly.
Before we move on, let's take a step back and think about the bigger picture. Aster Healthcare's journey highlights the massive potential of the Indian healthcare market, which is driven by a growing population, rising incomes, and increasing awareness about health. The demand for quality healthcare services is skyrocketing, creating amazing opportunities for providers like Aster Healthcare.
Their strategic focus on specialized care is in line with a global trend. As medical science and technology advance, the demand for complex procedures and specialized treatments is only going to increase.
And Aster Healthcare is in a great position to meet that demand. They're investing in centers of excellence, recruiting top medical talent, and incorporating the latest technologies.
Their embrace of technology also shows how transformative digital healthcare can be. Telemedicine, remote patient monitoring, and data analytics are revolutionizing how healthcare is delivered, making it more accessible, more efficient, and leading to better outcomes for patients.
Aster Healthcare is at the forefront of this digital revolution. They're investing in telehealth platforms, building a robust cybersecurity infrastructure, and exploring how artificial intelligence and machine learning can be used in healthcare.
And their commitment to ESG principles reflects a wider trend. Investors and consumers are increasingly demanding that companies operate responsibly, considering their impact on the environment, society, and how they govern themselves.
Aster Healthcare is responding to this demand by implementing sustainable practices, promoting diversity and inclusion, and making sure they conduct business ethically.
So their story isn't just about their individual success, it's also about the positive changes happening in the healthcare industry worldwide.
Now let's move on to talk about some specific aspects of their operations, specifically their patient safety and quality of care initiatives, their commitment to clinical excellence, and their efforts to attract and retain top medical talent.
Okay, let's explore those areas in more detail.
Aster Healthcare makes patient safety and the quality of their care a top priority. They've implemented a comprehensive quality management system, which includes rigorous protocols, regular audits, and initiatives for continuous improvement.
They've adopted international best practices and achieved accreditation from well-respected organizations like the National Accreditation Board for Hospitals and Healthcare Providers, NABH. This demonstrates their dedication to meeting the highest standards of quality and safety.
They also emphasize patient-centered care, making sure that all their patients have a positive and compassionate experience. They have special teams that gather patient feedback, address any concerns, and ensure their services meet individual needs.
Their commitment to clinical excellence is evident in their focus on tertiary and quaternary care services, which involve complex procedures and specialized treatments. They've set up centers of excellence in key areas like cardiac sciences, neurosciences, oncology, and orthopedics, which draw patients from all over India and even other countries.
Those centers of excellence are equipped with cutting-edge technology and staffed by highly skilled medical professionals, ensuring that patients get the very best care.
They also highlight their achievements in performing complex procedures. For example, in FY24, they did over 510 transplants and more than 1,140 robotic surgeries. It shows their expertise in these advanced areas.
Wow, that's impressive. And their annual report also talks about their dedication to research and innovation. They're actively involved in clinical trials, exploring new treatments, and pushing the boundaries of medical science.
Yeah, they know that continuous innovation is crucial if they want to stay ahead and provide the best possible care. Their commitment to attracting and keeping top medical talent is also really clear in their human resources initiatives.
They offer competitive salaries, great benefits packages, and professional development opportunities, which makes for a pretty attractive work environment.
And they have top-notch training programs to make sure their medical staff are always up to date with the latest advancements and techniques.
I also like that they're focused on building a diverse and inclusive workforce. They're actively working to attract and retain women in healthcare, recognizing how important gender diversity is for providing comprehensive and compassionate care.
Yeah, it's not just about getting the best people. It's about creating an environment where they can thrive and do their best work.
And the social responsibility initiatives we talked about earlier probably play a role in attracting and retaining talent too.
Mm.
People who work in healthcare are often drawn to organizations that share their values and commitment to making a positive impact.
Right. It's about creating a sense of purpose, a shared mission that goes beyond just working in the hospital.
Okay, so let's shift gears a bit and talk about some of the challenges and risks they mention in their annual report. The things that could potentially affect their future performance.
Right, because every success story has its hurdles. And the healthcare industry is constantly changing. There's always pressure from new technologies, evolving regulations, and increasing competition.
And Aster Healthcare seems to acknowledge these challenges directly in their report. They're not trying to hide from potential risks. They're addressing them head on.
Yeah, one of the main challenges they highlight is the increasing competition in the Indian healthcare sector. The market's attracting a lot of investment, which means a lot of new players, both from India and other countries.
So that increased competition must put pressure on pricing. Aster Healthcare has to stay operationally efficient and offer real value to its patients.
Absolutely. They also need to constantly innovate and find ways to stand out from the crowd if they want to attract and keep patients in such a competitive market.
Another big challenge they talk about is how rapidly technology is changing in healthcare. Telemedicine, remote patient monitoring, artificial intelligence, data analytics, it's all transforming how healthcare is delivered, which creates both opportunities and challenges.
For sure. Aster Healthcare has to stay on top of these advancements and make strategic investments in technologies that improve patient care, make things more efficient, and give them a competitive edge.
But, as we talked about earlier, those technology investments can be expensive, and they need to be carefully planned and executed to make sure they actually pay off.
Right, and there's always the risk that new technologies could become outdated quickly, forcing them to invest even more and potentially hurting their profits.
The regulatory environment is another potential challenge. Healthcare is heavily regulated, and any changes in government policies could affect how they operate and how profitable they are.
That's true. They need to be agile and adaptable, keeping a close eye on any regulatory changes and adjusting their strategies as needed.
And then, of course, there are always those unexpected events that no one can control, like pandemics, natural disasters, or economic downturns. These can disrupt operations and affect their financial performance.
Definitely. Those external factors are impossible to predict. But, they've shown that they can be resilient and adaptable in the past. And their risk management framework should help them deal with those kinds of challenges.
Okay, let's zoom out for a minute and think about what Aster Healthcare's journey means for the Indian healthcare landscape as a whole.
All right, let's connect their story to the bigger picture.
Aster Healthcare's success is a good example of the power of private enterprise in the Indian healthcare system. They've shown that private companies can bring in expertise, innovation, and a patient-centered approach to healthcare delivery, and that this can complement and strengthen the public healthcare system.
And the way they focus on specialized care is having an impact on the direction of healthcare in India.
Right. As medical science and technology continue to advance, the demand for those complex procedures and specialized treatments is only going to grow. Private companies like Aster Healthcare are in a good position to meet that demand.
And their investment in technology is also helping to create a more digital and connected healthcare ecosystem, which benefits both patients and providers.
And their commitment to ESG principles is setting a good example for other companies in the industry, encouraging them to consider their impact on the environment, society, and how they govern themselves.
So Aster Healthcare's story is not just about their own success, it also reflects the positive changes happening in the Indian healthcare sector overall. These changes are being driven by government initiatives, private investment, and a growing emphasis on quality, accessibility, and sustainability.
Now let's focus on some specific aspects of their operations that give us more insight into their strategies and how they approach delivering high-quality healthcare.
Okay, let's look at some of the details highlighted in their annual report.
One thing they emphasize is their commitment to providing tertiary and quaternary care services. These involve those complex procedures and specialized treatments that require advanced technology and highly skilled medical professionals.
Exactly. They've set up centers of excellence in key areas like cardiac sciences, neurosciences, oncology, and orthopedics. These centers attract patients from all over India and even from other countries.
And these centers are equipped with the latest technology and staffed by experienced medical professionals, ensuring that patients get the best possible care.
They also highlight their achievements in performing complex procedures. For example, in FY24, they performed over 510 transplants and more than 140 robotic surgeries. This shows their expertise and capabilities in these advanced areas.
Another important aspect they highlight is their patient-centric approach to healthcare. They recognize that patients are more than just medical cases. They're individuals with unique needs and expectations.
Right. They've implemented several initiatives to improve the patient experience. They have dedicated patient experience teams, they use feedback mechanisms, and they develop personalized care plans.
They also emphasize communication and transparency. They want to make sure patients are well informed about their treatment options, the risks and benefits involved, and the expected outcomes.
Absolutely. And patient safety and quality of care are top priorities. They have a comprehensive quality management system in place with strict protocols, regular audits, and continuous improvement initiatives.
They've adopted international best practices and received accreditation from well-respected organizations like the National Accreditation Board for Hospitals and Healthcare Providers, or NABH. This shows their commitment to meeting the highest standards of quality and safety.
Exactly. And their annual report also highlights their efforts to attract and retain the best medical talent. They understand that their workforce is their most valuable asset, and they're investing in creating an environment that encourages professional growth, offers comprehensive benefits, and promotes diversity and inclusion.
They offer competitive salaries, world-class training programs, and opportunities for career advancement, which helps them attract skilled medical professionals from all over India and even other countries.
They also focus on employee well-being. They provide mental health support, encourage a healthy work-life balance, and foster a positive and supportive work environment.
So it's not just about recruiting the best people. It's about creating a workplace where they can thrive and do their best work.
Exactly.
Let's talk about their social responsibility initiatives now. They seem to be an integral part of their overall strategy.
They truly believe that their responsibility extends beyond just their hospitals. They're committed to making a positive impact on the communities they serve.
Their CSR programs, which include those mobile medical camps, health awareness initiatives, and disaster relief efforts, have touched the lives of millions of people across India.
They're particularly focused on providing healthcare access to communities that are underserved, empowering people through education and skill development, and promoting environmental sustainability.
The Aster Homes project, which we discussed earlier, is a great example of their commitment to social responsibility. Rebuilding 255 homes for flood victims in Kerala, providing shelter and hope to people who desperately needed it.
Their mobile medical services have reached over 1.4 million people, bringing essential healthcare services to remote and underserved areas.
And their medical and wellness camps have provided free health checkups, screenings, and awareness sessions to over 992,017 people.
So they're actively trying to reduce healthcare disparities, empower communities, and promote well-being, even outside of their hospitals.
Their commitment to environmental sustainability is also worth mentioning. They've implemented a variety of initiatives to reduce their environmental footprint, like water harvesting, using energy-efficient lighting, and having waste management programs.
And they're also working hard to reduce their greenhouse gas emissions and promote responsible waste disposal.
They're not just about treating patients. They're also concerned about taking care of the planet.
Right. Now let's go back to their financial performance and look at some key metrics that highlight their strengths and areas where they could potentially improve.
Okay, let's dive into the numbers.
One metric that stands out is their average revenue per occupied bed, or ARPOB. It's a key indicator of how efficiently they're operating and how profitable they are. In FY24, their ARPOB was 40,100 rupees, which shows they're good at generating revenue from each occupied bed.
That strong ARPOB is a result of their focus on specialized care, their efficient bed management practices, and their ability to charge higher prices for their services.
Another key metric is their bed occupancy rate. This tells us what percentage of their available beds are actually being used by patients. In FY24, their bed occupancy rate was 70%, which is a healthy level of utilization.
That high occupancy rate is a good sign. It suggests strong demand for their services and efficient bed management.
But there's always room for improvement. They could explore strategies to increase that occupancy rate even further, especially in their newer facilities.
Their outpatient visits, which tell us how many patients they're seeing on an outpatient basis, also provide valuable insights. In FY24, they had over 3.05 million outpatient visits, showing a strong and growing patient base.
That high volume of outpatient visits not only adds to their revenue, but also expands their reach and impact. It means they're providing healthcare services to a larger population.
Their return on capital employed, or ROCE, is another important metric to look at. It measures their profitability relative to the capital invested in their business. In FY24, their ROCE was 16.4%, which shows they're using their capital efficiently and generating good returns for their investors.
That strong ROCE is a result of their strategic decisions, operational excellence, and ability to create value for their shareholders.
Now let's look at some potential areas for improvement that are highlighted in their financial statements.
Okay, let's examine some areas where they could do even better.
One area that stands out is their debt-to-equity ratio. While it's currently healthy at 0.41, they could potentially lower it further to reduce their financial risk and have more financial flexibility.
They could explore different ways to reduce their debt burden, such as optimizing their capital structure, improving their cash flow management, or paying down their debt faster.
Their operating margin, which measures their profitability relative to their revenue, is another area for potential improvement. In FY24, their operating margin was 8.5%, which could be increased through cost optimization measures, improved efficiency, and strategic pricing strategies.
Right. They could look into ways to streamline their operations, negotiate better prices with suppliers, and optimize how they use resources to improve profitability.
Another area that could potentially be improved is their asset turnover ratio, which measures how effectively they're using their assets to generate revenue. In FY24, their asset turnover ratio was 0.74, which suggests there's room for improvement in how they're utilizing their assets.
They could explore strategies to optimize asset allocation, improve capacity utilization, and enhance inventory management to boost their asset turnover.
Their days sales outstanding, or DSO, which measures the average time it takes them to collect payment from their customers, is another area they could potentially address. In FY24, their DSO was 73 days, which is a bit high.
They could implement measures to improve their billing and collection processes, such as offering incentives for early payment, streamlining their credit approval process, and actively managing their receivables. This would help them reduce their DSO and improve their cash flow.
So while Aster Healthcare has shown really strong financial performance, there are always areas where they can do even better. By addressing these potential areas, they can further improve their profitability, reduce their financial risk, and solidify their position as a leader in the Indian healthcare sector.
Now let's turn our attention to their corporate governance practices. These are crucial for ensuring transparency, accountability, and ethical conduct.
Okay, let's take a look at their governance framework.
Aster Healthcare has a clear and well-defined corporate governance structure. They're guided by the principles of transparency, accountability, fairness, and responsibility. Their board of directors, made up of experienced professionals with a wide range of expertise, provides strategic guidance and makes sure there's effective oversight.
They also have several committees in place to handle specific areas, like the Audit Committee, the Nomination and Remuneration Committee, the Stakeholders Relationship Committee, and the Risk Management Committee.
These committees are really important for ensuring compliance, managing financial resources, evaluating how well executives are performing, and mitigating potential risks.
The Audit Committee, in particular, plays a crucial role in overseeing the financial reporting process, reviewing the financial statements, and making sure the internal audit function is independent and effective.
And the Risk Management Committee is responsible for identifying, assessing, and managing potential risks. They develop mitigation strategies and monitor how effective those strategies are.
They also have a strong whistleblower policy that encourages employees and other stakeholders to report any unethical conduct or violations of their code of conduct.
So they've created a culture of transparency and accountability where ethical behavior is a top priority.
Now let's look at some specific examples from their annual report that show their commitment to responsible business practices.
Okay, let's examine some of their initiatives.
One area they emphasize is their commitment to diversity and inclusion. They're actively working to create a workforce that reflects the diversity of the communities they serve, promoting gender balance and providing equal opportunities for everyone.
Their efforts to increase the representation of women in leadership positions are particularly noteworthy. They recognize how important it is to have diverse perspectives and experiences at all levels of their organization.
They're also committed to providing equitable access to healthcare. They want to make sure their services are available to everyone, regardless of their socioeconomic background.
They participate in government schemes, offer subsidized treatments, and conduct outreach programs in underserved communities to ensure that everyone has access to quality healthcare.
Their environmental sustainability initiatives are also commendable. They've put in place various measures to reduce their environmental footprint, including water harvesting, using energy-efficient lighting, and implementing waste management programs.
They're also working to reduce their greenhouse gas emissions and promote responsible waste disposal.
So they're taking real action to minimize their impact on the environment and contribute to a more sustainable future.
Their annual report also highlights their commitment to ethical sourcing and supply chain management. They're working to ensure that their suppliers adhere to ethical labor practices, environmental standards, and human rights principles.
They conduct due diligence on their suppliers, engage in dialogues to promote responsible practices, and try to source materials and products from sustainable and ethical sources.
So they're taking a holistic approach to responsible business conduct, considering their impact not just on their patients and employees, but also on their suppliers and the broader community.
Now let's shift our focus to their plans for the future and their vision for the years ahead.
Okay, let's explore their roadmap for growth and innovation. Aster Healthcare has some pretty big expansion plans. They want to become one of the top healthcare providers in India. So they're investing in new hospitals, expanding existing ones, and looking at new markets to meet the growing demand.
And their focus on specialized care is still a big part of that, right?
Exactly. They're putting money into those centers of excellence, recruiting top doctors, and incorporating cutting-edge technology. They want to make sure they're offering the best possible care, especially in those specialized areas.
And they're not ignoring the digital revolution in healthcare either.
Absolutely. They are investing in things like telehealth platforms, building up their cybersecurity, and exploring how they can use artificial intelligence and machine learning. They see technology as a key driver of change in healthcare, and they want to be at the forefront.
It sounds like they're also committed to making their approach even more patient-centered.
Right. They're working on personalized care plans, making communication more transparent, and striving to create a more positive experience for their patients.
And their commitment to their workforce is still strong.
Yeah, they're continuing to invest in their employees, offering opportunities for professional development, promoting diversity and inclusion, and fostering a supportive work environment.
And their dedication to social responsibility is pretty inspiring.
They're expanding their CSR initiatives, reaching out to more communities, and trying to make a real difference in people's lives.
So Aster Healthcare has a clear vision for the future, and they're actively taking steps to make it happen. But before we wrap up this deep dive, let's step back and think about what their journey means for the Indian healthcare landscape as a whole.
Okay, let's look at the bigger picture.
I think Aster Healthcare's success really shows the power of private companies in the Indian healthcare system. They've shown that they can bring in expertise, innovation, and a focus on the patient, which can really make the public healthcare system stronger.
And their focus on specialized care is shaping the future of healthcare in India.
Absolutely. As medical science and technology get more advanced, the demand for those complex procedures and specialized treatments is only going to go up. And private players like Aster Healthcare are in a good position to meet that demand.
Their investments in technology are also helping to create a more digital and connected healthcare system, which benefits everyone involved.
And their commitment to ESG principles is setting a good example. It encourages other players in the industry to think about their impact on the environment, society, and corporate governance. So Aster Healthcare's journey isn't just about their success. It's a reflection of all the positive changes happening in the Indian healthcare sector. It's a combination of government initiatives, private investments, and a growing emphasis on quality, accessibility, and sustainability.
Before we move on to some additional insights from their financial statements, let's pause for a moment and reflect. What stands out to you about Aster Healthcare? What piqued your interest?
Honestly, their commitment to quality and patient safety is really impressive. They've gone above and beyond to get accredited, implement strict procedures, and create a culture of continuous improvement. They clearly put their patients first.
I agree. Their focus on patient-centered care is also great. It's not just about treating illnesses, it's about treating people. They really try to understand each patient's individual needs, provide personalized care, and create a positive and supportive environment.
Their commitment to attracting and retaining top medical talent is also something I noticed. They're investing in their workforce, providing opportunities for professional development, and creating a culture that values diversity and inclusion. They know their employees are their most valuable asset.
Definitely. And their social responsibility initiatives are truly inspiring. They're not just motivated by profits, they genuinely want to give back to the community. Projects like Aster Homes, the mobile medical services, and the medical and wellness camps all show how dedicated they are to making a difference.
And I'm also excited about how they're embracing technology. They're using things like telehealth, remote patient monitoring, and data analytics to improve access, efficiency, and patient outcomes. They're really at the forefront of the digital healthcare revolution.
Aster Healthcare has a strong vision, a commitment to excellence, and a real desire to make a positive impact. There's a lot to admire about their approach.
Now let's take a closer look at their financial statements to get a better understanding of their overall performance.
Their consolidated financial statements provide a comprehensive view of their financial health. They reported a consolidated revenue from operations of 5,244 crore rupees for the year ending March 31st, 2024, which is a 21% increase compared to the previous year. That shows some strong top-line growth.
And were they able to maintain profitability alongside that revenue growth?
Absolutely. Their consolidated EBITDA for FY24 was 620 crore rupees, which means a healthy 11.8% margin. It shows they're effectively translating revenue growth into profits.
That's impressive. But let's not just focus on the top-line numbers. Let's look at their costs and expenses to really understand what's driving their profitability.
One key area is their employee benefits expenses, which came to a total of 1,004 crore rupees in FY24. This reflects their commitment to having a strong, well-compensated workforce.
Their finance costs are also worth noting, especially considering their recent strategic decisions. In FY24, these costs reached 123 crore rupees, including interest expenses on their borrowings and lease liabilities.
And, as we've already discussed, their investments in technology and cybersecurity are likely to have an impact on their operating costs going forward. But it's important to consider these expenses in the context of their long-term growth strategy.
Exactly. Investing in technology and having a great workforce are essential if they want to remain competitive and continue providing high-quality healthcare. Let's analyze some key financial ratios to get a better sense of their overall performance.
Their debt-to-equity ratio as of March 34, 2024, was 0.41. This suggests a healthy balance between debt and equity financing, indicating they're not overly reliant on borrowing.
That's definitely a positive sign. How about their return on equity?
For FY24, their ROE was a very impressive 23.2%, which shows they're very efficient at generating profits from shareholder investments. This strong ROE reflects well-made strategic decisions, operational excellence, and their ability to create value for their shareholders.
And what about their short-term liquidity? How well are they positioned to meet their short-term financial obligations?
Their current ratio, as of March 31st, 2024, was 1.09. This indicates they have enough short-term assets to cover their short-term liabilities, suggesting they're in a good position to manage their working capital and fulfill their financial obligations.
Their inventory turnover ratio is also a good indicator of operational efficiency. What can we learn from that?
In FY24, their inventory turnover ratio was 7.44, which suggests they're managing their inventory well and effectively minimizing the risk of things becoming obsolete or spoiling.
So when we consider all of these financial ratios, along with their overall performance, it paints a positive picture. They're financially sound, well-managed, and strategically positioned for continued growth.
True, but we always have to remember that past performance doesn't necessarily predict future results. The healthcare industry is constantly evolving, and Aster Healthcare needs to stay adaptable, keep innovating, and adjust to changes to keep succeeding.
Now, let's take a closer look at some specific details within their financial statements to gain a deeper understanding of their operations and strategies.
The notes to their consolidated financial statements offer a wealth of information about their accounting policies, the key assumptions they make, and the risk factors they face. For example, they explain how they recognize revenue from their various services.
Right. How do they handle that?
Well, when it comes to hospital services, they emphasize that they recognize revenue when those services are actually provided, unless there's some major uncertainty about the future.
So they're being cautious and only recognizing revenue when they're reasonably sure of it. What other details stand out?
They provide a good amount of information about how they assess impairment for goodwill and other intangible assets, including the key assumptions and methods they use in that process.
These impairment assessments are crucial for ensuring that the value of their assets, as recorded on their books, truly reflects their real economic value.
Right. They also disclose details about their foreign currency transactions and translations, which is important because they have international operations.
Okay, how do they manage that?
They translate their foreign currency transactions into their functional currency using the exchange rates that were in effect on the dates of those transactions.
That makes sense. So they're managing currency risk and making sure their financial reporting is accurate. What about their policies for accounting for leases?
They follow the principles of IND AS 116, which is the standard for lease accounting. This means they have to recognize right-of-use assets and lease liabilities for most of their leases.
This new accounting standard provides a much clearer and more transparent picture of their lease commitments. Transparency is key. What other important disclosures are there?
They also provide details about their employee benefit plans, including their obligations for gratuity and provident funds. These disclosures help us understand their long-term liabilities and commitment to employee well-being.
Their notes also include information about related party transactions, which are any dealings they have with entities that are connected to their management or board of directors.
These disclosures are essential for maintaining investor confidence and ensuring they're conducting business ethically. Their statements also acknowledge the inherent uncertainties in their business. They talk about the potential impact of external factors like economic downturns, changes in regulations, and unpredictable events like pandemics.
It's good to see that they're being transparent about these risks and explaining the strategies they're using to mitigate them. These detailed disclosures in their financial statements really give us valuable insights into how they operate, their accounting policies, and the assumptions underlying their financial results.
Absolutely. And that kind of transparency helps build trust with investors and other stakeholders.
We've covered a lot of ground today, exploring Aster Healthcare strategic decisions, financial performance, risk management practices, and commitment to responsible growth. It's been a thorough deep dive.
It really has.
But before we wrap up entirely, let's distill the key takeaways for our listeners.
Sounds good. Let's recap.
Aster Healthcare is a company that's clearly on the move. Their bold decision to focus solely on India demonstrates their confidence in this rapidly growing market, and their financial performance definitely backs up that confidence.
They've achieved impressive revenue growth, expanding margins, and strong returns on equity, all while investing in their workforce, promoting diversity and inclusion, and showing a strong commitment to social responsibility.
Their strategic focus on niche specialties and their embrace of technology position them well for continued success in this dynamic healthcare landscape.
And their commitment to ESG principles highlights the increasing importance of sustainable and responsible business practices.
Aster Healthcare's journey offers valuable lessons for anyone who's interested in the Indian healthcare market, showcasing the opportunities, challenges, and strategies for success in this ever-evolving sector.
Exactly.
So what's the final takeaway for you, the listener?
Aster Healthcare is a force to be reckoned with in the Indian healthcare sector. Their story is one of opportunity, growth, and a genuine commitment to making a positive impact. They're definitely a company to keep an eye on as they continue to shape the future of healthcare in India.
And with that, we conclude our deep dive into Aster Healthcare. We hope you found this exploration insightful, engaging, and thought-provoking.
Until next time, happy exploring.